Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a part of the subscription service that I offer, at ClayTrader.com called The Inner Circle. Real quick, a couple disclaimers, as I say every week. First off, am I trying to imply that every alert is a huge success? Unfortunately, no. Nobody is perfect. No scanner is perfect. No such thing as a perfect trader. So yeah, losses do happen. And I bring that up because the key thing here is while losses do happen, so that's why risk management, risk control is so important, but winners also happen. So when those winning trades do occur, and they're going to happen, you want to make sure that you have the systems and rules in place that allow you to best capitalize on those winners. Meaning you don't have a bunch of winners and then, a loss all of a sudden wipes everything away. So that is why risk management is so important. And again, if you watch past videos in this series, I've shown plenty of losses and stuff like that. But the point being, yeah, I'm not trying to come across as the perfect trader. Losses happen, but that is why risk control is so important. Second, as far as which ones we'll be looking at, we're going to go back to the week of May 20th. Why are you going so far back, Clay? Well, two reasons. First off, it's just simply giving the chart plenty of time to play out so we can see what's actually happened. And second, just a matter of being fair. I don't want people to be paying for something and all of a sudden see it out there for free. Those people would be totally justified and probably feeling pretty ripped off at that point. So I'm sure you understand from that perspective. So with those disclaimers out of the way, let's get to it. Two quick questions that I get all the time. Hey, Clay, what prices do you focus on? I focus on prices all over the place, and you'll see that here. Prices, sure, I consider them, but they're very, very low on the priority list. The top of the priority list is just, do I think the odds, do I think the probabilities are in our favor to make money? So that is the leading, factor, not the price of anything. So, and if you've watched past, of these videos, you've seen some where, in fact, we're going to have it in this video as a spoiler. We're going to have stocks that are penny stocks, and then we'll have one that's actually up over $100. So the prices are all over the place because, again, price very low on the priority list. I'm all about what do I think gives me and my members the best chance to make money. Second off, when do you send these out? These are always sent out on the weekends. That way you have plenty of time to look things over, plenty of times to think. It's not like it's some text message where you have to get the text message and then all of a sudden you got to quickly make a decision. The total opposite of that, you'll have plenty of time to look things over. So for this first alert that was sent out, put it into the pullback play category, ticker symbol IPHI. And as I mentioned right here, there seemed to be some good solid support right around the 38-ish. So right around the $38 range. So let's see how this one played out and if this one got the pullback. So again, the next candle you will see will be Monday morning. So let's see how it played out. And you can see it gapped down even more, but didn't quite get down to that 38-ish mark. And then I'll just speed things up. And yeah, this happens. I got that one wrong in the sense of, the entry point, the entry area that I thought I could pull back to just didn't happen. And you can see that this thing just has continued to go higher and higher. And as of the recording of this video, it may not even be done going up. Maybe it'll rise even higher than this. But yeah, sometimes that happens. So as much as I always wish I could, try to say, well, yeah, members got, no, that I clearly said 38-ish and, it was still a ways away. But yeah, sometimes that happens. And as disappointing as it is, and kind of from the marketing perspective here, I really wish I could say that, yeah, members got in and absolutely nailed the bottom, but that'd be a little disingenuous. But it is what it is as far as a learning example is concerned. Sometimes, you're going to have an idea of where you want to get in, and it just doesn't happen, and then the price leaves you in its dust. And you know what? Welcome to the life of being a trader. It doesn't make you a bad trader. It just makes you human. It is what it is. Our next one here, there we go. I don't know what happened there, but next one, ATNM. And the whole thing here, was it a start of a bigger breakout? You can see volume came in, broke the trend line. So yeah, was this the start of something bigger? And take note of the price. We are now talking about a penny stock. So this thing is trading for well below $1. So again, this is what was sent out over the weekend. Plenty of time to look things over. So the next candle you'll see will be Monday. And you can see right here, just decides to do some consolidating. Nothing nasty, so plenty of time to get in. It's not like the price crashed to the downside or anything like that. So plenty of time for members to pick up some shares for a potential follow-through. And then right there, things came to life. Things came to life a little bit more. And right up there, and this is why I like this example, yeah, that was basically a 21% move. But the thing that I really like about it is just, sometimes things, and I talked about this last week, can be looking great. I mean, think about it. At this point in time, there's actually a gap up, and you could very logically be thinking, oh, wow, this is looking great. This is looking great. And then from there, it just totally just ran out of steam. And that's just what happens sometimes. Sometimes you can be having something that is taking shape, it's acting great, and then all of a sudden, nothing. So yeah, it was a 20.7% move. So that's why I'm not considering this a losing trade by any stretch. I mean, but as far as a very modest winning trade, maybe even probably not a break even. I mean, that was still 20% or 21% right around there. That's a pretty big profit window to work with. I mean, even if you screwed up 75% of the trade, I mean, that still gives you 5% of wiggle room to work with. But like I said, very, very modest win. But the point here and why I enjoy this, once again, not from a marketing perspective, but definitely from a learning and education standpoint, is, it really illustrates that, and look at that, and then just down it went. So don't get stubborn. Just because something is looking great, you're like, well, it was looking great, therefore I'm not going to do anything. I'm just going to hold. Well, this is what you can risk. I mean, there was money to be made. Sure, was it annoying? Yeah, it was definitely an annoying trade because things were, it was gapping up. Things were looking good, and then nothing, and then just down it went. And like I said, if you watched last week's video, same exact type of example where things were looking great, and then all of a sudden it pulled back. And had you gone in a stubborn mode, things would have gotten a whole lot worse. So sometimes you just got to take the modest win. Who knows, maybe even just a break even and move on and find something else. Next alert here was a pullback play. And pretty much, and now real quick, the note. So here's a stock up over $100. So we've gone from a penny stock now to a stock up over 100. And the whole thing here was, is this going to be a fake breakdown of that 200 period, which is that red line right there? And yeah, it's a more expensive stock, but as I mentioned, for those of you that use options, understand what options are, then yeah, options were to be a way that you could have played this. So, I don't want to offer up any spoilers, but from an options perspective, I will say that some big money could have been made here. So here was the chart going into the weekend, and then on Monday, you can see right there, pulled back, and technically you could have gotten even a better entry point than 130, but I'll just keep it at 130. I won't manipulate the numbers or anything like that. But point being, yeah, it broke down through it, but like I said, opportunity right there, but nothing crazy. And then let's see what's happened from that point forward. So it took a little bit of patience, pulled back again, but you can see never violated 130 ever again. And then started to really come to life. Minor pullback right there, and then just more life. And as of right now, so who knows, this thing may not even be done going up yet, but 30% from the move down there. I get it, 30%. Is it like a massive mover? Actually, yeah, for a $100 stock, or actually for a $130 stock, 30% is very, very respectable. And then, but like I said, if you factor in and you understand the options market, truly, if the main stock, the underlying stocks, to use terminology, moves 30%, then the options, like I said, there could have been some big money that was made. But right there, nice movement there, got the nice 30%. And then I want to look at two more. This is the part of the newsletter which is geared towards people that have gone through the classes that I offer. So the reason there's no charts is because, these people have knowledge. They understand what to look for. They understand the strategies and the rules. So all I need to do is give them a ticker symbol, and then they know what to go and kind of do with it. So I use this analogy a lot. It's kind of like I'm just saying, hey, there's probably some fish over there, but because they know how to use the fishing pole, bait the line, cast it, and all that sort of stuff, all right, yeah, I'll take it from here. I'm going to go over there, which really illustrates the power of knowledge. So that, again, that is why there's no actual images here, because these people, the overall context is they are armed with knowledge and they know what to do with it. So the first thing we're going to look at is some shorting. And real quick, shorting, if you're new, just means if prices go down, you actually are making money. Yes, I'll say that again because I remember it kind of was like, wait, what? When I first heard it. But going short, shorting, that means if prices go down, you are actually making money. So with that being said, let's look here at BBBY. And that, this one was just, I don't think there was really any trade there. Microsoft was actually a nice little mover there too to the short side. It's since recovered, but there was some profit. But we're going to look at BBBY. So there's what the chart looked like going into the week. And remember, prices going down is a good thing. So we want to see prices start to drop. So that right there, that is good. That is even better. So there we go. Prices going down is a good thing. And you can see that prices have gone down even further than that. And so far, as of right now, that move is good for 22%. Like I said, this may not be going down. As the time of this recording, it's still sitting down at low, so who knows? Maybe this is going to drop some more and that 22% will rise up. But regardless, nice movement there and a great example of why you need to be flexible as a trader and be able to make money even when prices are going down. And then the final one we're going to look at here is, again, different type of strategy called the trampoline trading. And for this one, we're going to look at INSY. So let's see how this one played out. As that reminder, no image that you saw there, because this is just for students that know the rules, know the strategy. So they know what to do with it. They don't need anything else other than the ticker symbol. So here's what the chart was looking like. So let's see how this one played out. So not much happened at first, but the whole point was just let's get it on your radar. Let's see if anything happens with it. So it took a week or so. And then boom, one day, look at the volume surge. And that movement right there was good for 106%. Now, am I saying anybody scored perfectly and got 106%? No, I'm not saying that. But let's just, as always, err on the side of caution and say that you screwed up half the trade, so you only made half of that. All right, well, there you go. That's still 53% that you made. So 53% for just really, basically a day's worth. Most of the time, it was just on the radar. But this all happened in a single day. So 53% in a single day, I'm pretty sure your local bank is not going to pay you that, but it just goes to show keep losses minimal, control risk, analyze risk, because losses do happen, but these sorts of moves also happen. So when they do happen, they can wipe away a whole lot of losses and keep you in the green. So that's why discipline is so very important, but a great way to end here on INSY, big old mover. So congratulations to those trampoline trading students. Now, if you are interested in joining up, all you got to do is go to claytrader.com/team. This is just one part of the subscription service. The other part is there is a live chat room where I hang out and I'm very active on a daily basis. So I'm making alerts. I'm offering up watch list. We have lots of other quality traders in there. Good structured rule environment. So it's not like it's filled with pumpers or bashers. It's just alerts, and it's a very efficient place to be. And then also there is an app. So it's not like you have to stay chained to your computer or anything like that. You can stay in touch wherever you are at. And the price, as far as, well, it's not a price. Really, you got to look at that as an investment. Meaning, if I invest $99, the question and number becomes $8.25 per week. In other words, if I invest $99, do I think it can help me make more than $8.25, not per day, but per week? If you think that this will help you make more than $8.25 per week, then why would you not invest $99? Now, that number actually goes even lower if you go for the 1 year amount, but we'll just use this amount because that's the highest it could be, is $8.25 per week. So that's, like I said, the question that you need to look at and ask yourself: if I invest the $99, $8.25 per week, do I think it can help me make more than that? And if you answer yes, well then here you go. Sign up and let's get started. So I will see you on the inside, and I look forward to getting to know you better.